McDonald's. Shares there, you're seeing them tick lower just slightly here as the fast food giant sales in the third quarter falling short of expectations as weak international sales weighed on its earnings report. To discuss what's next for McDonald's, we have Sean Dunlop, who's the Morningstar analyst. Sean, I want to get your read through here on the Arcos Dorados here, McDonald's, of course, not to be confused with their Latin American business, obviously, but the read through, especially as consumers are looking for more value, even when they are eating away from home.
Yeah, I thought it was actually generally a positive quarter. I was a little bit surprised by the market reaction. As you point out, the international business was a bit light, and this was the company that a lot of people thought might actually top earnings estimates within the industry, which obviously didn't happen with results coming in roughly in line. I still thought it was positive, though. In the United States, we saw comparable sales increase 30 basis points. That's a pretty sharp improvement from a 70 basis point decline a quarter ago. That was traffic driven, which is really encouraging, and they actually gained share with that low income consumer for the first time in about a year. So from McDonald's perspective, that gap that we see relative to industry traffic and industry check is the highest we've seen since the first quarter of 2023. I think that's the point that shouldn't be lost as investors consider the forest and the trees. They are trading margin for that. That has a little bit of a downside. If you look at company-owned stores, margins clocked in a little bit below 13%. For the full year, we project store-level margins down about 120 basis points. Looking forward, though, guest-led growth is a lot more sustainable. It looks to me like McDonald's has righted ship here.
Sean, I mean, what is front and center, though, on people's minds right now? Wasn't reflected in this quarter is the E. coli outbreak, just what exactly that looks like, the pressure it's going to have on McDonald's results this current quarter. What do you think?
Yeah, I think they handled it as well as you could possibly ask. So typically, this happens every few years in the industry. For McDonald's, you've got 42,000 stores. You operate in more than 100 markets. You've got myriad suppliers. These happen periodically. It is the first time it's happened for them in the United States in 40 years. The good news is that this was a supplier issue, an ingredient issue, and not a process issue. So we don't think that it's likely to repeat. They had alluded to traffic trends really starting to inflect positively at the start of the fourth quarter. And then obviously they were negative over the past week as the news about this outbreak broke out. So as we look back at sort of historical context, we expect this to be maybe a low single-digit traffic impact in the fourth quarter. Fortunately, we think this is going to be contained, given that they were able to very quickly isolate the source. They're very transparent about the process. And given, again, that it was an ingredient issue, not a process issue, we think it's pretty unlikely to happen again.
Should we expect more value meals from McDonald's as all of the kind of quick service restaurants, fast food are competing to make sure that they can not just woo people and customers with rewards, but make sure that there's value in every single purchase that they are making and engagements that they do have? And what does that net out for some of the margins at the company?
Yeah, as we alluded to earlier, it does have a negative margin impact, and we should expect a little bit more value offering. So when you see restaurants struggle with comparable store sales, kind of the two levers that they have to pull are menu innovation and promotions and advertising. We've definitely seen plenty of both from McDonald's, should expect to continue to see plenty of both from McDonald's. That $5 meal deal was really effective at bringing back lower income consumers to the store, at improving the firm's value perception, which had started flagging a little bit. We expect a lot more of the same moving forward. You definitely see that in the margin line, but as long as you also see that in the traffic line, that's just fine as far as we're concerned.
Sean, what do you think is the number one biggest challenge outside of maybe E. coli outbreak? I don't even know if you would say that, but what is the biggest challenge here for McDonald's as you look ahead to 2025?
Yeah, I really think it's price competitiveness. So you think about 30 basis points, comparable store sales growth in the U.S. outperforming the industry by a wide margin. That's very concerning. Right now, we live in an environment where wage growth is consistently higher than expected food cost inflation. For restaurants, that means that as the quarters progress, they're growing less and less competitive from a price standpoint with grocery stores. And we're seeing consumer traffic continue to favor that cheaper grocery store channel. The difference on a per meal cost basis is a little bit less than $5. It's the highest it's ever been. And consumers, particularly low-income consumers, continue to migrate. So that's probably the biggest concern moving forward.